Hi there, thank you for viewing this week's video. Let's look at the indices and check out how they have performed, also the outlook for the upcoming week. First, let's do a quick discussion on the market performance last week. The US market began with a sell-off before the release of the core CPI data. And due to the rising treasury bond yield, the market continues to be fearful. After the CPI data, there were attempts to rebound, but all the buying up action were quickly met with selling pressure. And the US market ended the week with another negative performance. So if you look at the screen over here, we are looking at the performance of the various indices last week, reference to 8th of April. So we have the Dow over here lower. In fact, all the indices across the world, all the major indices are down. Okay, so what we are looking at is that the NASDAQ is the worst hit index with lower action, 2.7% around there. The Dow is the better performing index with only 0.6% down. And the S&P 500 is around 2.2%. While STI is about 1.4% negative, and Hang Seng make a recovery. It was worse off compared to NASDAQ, but it managed to recover to go down only 1.6%. Okay, so let's take a look at the chart. So we have the Dow on the screen right now. So what we are looking at is that no doubt the whole week was down for the Dow. Technically, we are looking at the sorry, let me just switch over to the Dow again. So we have the Dow. Technically, we saw it was down 0.6%, but in fact, it was looking at trading within a range around its support level over here at 34,104. So the market continues to struggle on high inflation, and the next interest rate hike and the rising bond yield are pointing towards a recession as well. And separately, the bank's result doesn't really help the market. Personally, I cannot see the push factor for the market to rally until some news suddenly pop out to help the Dow break past 35090. And then we test 35391. If there is a miracle, we probably can see the change of trend if 35391 is retest, else Dow is facing the prospect of breaking its support. And the next key support zone is around here, 32260 to 32549, maybe retested, especially when Dow trades below this 34104, as I mentioned, if it breaks the support. Next, let's take a look at S&P 500. S&P 500 ended the week trading at the support level around here, and the poor closing at the end of the week has created much uncertainty. Currently, the chart is suggesting more potential downward movement, and the next support level that we are looking at is around here, 4281. As such, to negate the bearishness, the index must have a good start next week with a strong rebound above 4461. So let's see whether it can happen. Next, we have NASDAQ. NASDAQ, the market has had a mixed feeling about the higher CPI number, as some suggested that the inflation numbers has peaked and should be scaling back soon. But the higher treasury bond yield continues to put pressure on the tech companies. The NASDAQ is just trading above its support level at 13304. The index has not formed any reversal sign as yet. Like the S&P 500, in order to make a recovery, it must start the week ahead with a strong closing and its level above 13663 can signal for a higher movement. Failure to rebound can mean a breaking of this support level, and the next key support level is at 12590. Moving on to the Asian market, we have the STI moving lower. So I was half right about the STI as the index pushed lower to break below 3342 level. The last 2-day candle over here is suggesting that there might be a bullish reversal coming, potentially making this low, which is around 3330 as a support level. And however, it can only be confirmed if it will be a support until the index close above 3360. However, if it's a dead cat bounce, the index will not be able to retest 3398. But if the index can retest this resistance, then there might be a chance for a change in trend. Let's move on to the Hang Seng. The index started the short week with a sell-off and then some recovery to recover some loose ground. However, it cannot clear its 21568 level, which is crucial for it to maintain its sideways movement. While failure to break above this level can put pressure to the index, and there might be some downtrend. So breaking below this 20786 level may lead to calamity and potential sell-off towards this key support level at 18272 key support. All right, so wrapping up, what we are facing next week is uncertainty. Okay, so overall the charts looked more bearish than bullish, and the market remains fearful of the potential recession. And what puzzled me the most is that if the economy goes into a recession, how does a rising interest rate help the economy to recover? We all know that Fed has only 2 methods to use to help the economy stabilize: print more money and the interest rate. This year, probably we will see something different. Next week, the market is facing jobless claim data and the speech from the Fed Chair Powell, and of course, more result announcement. Tesla is set to announce result on the 20th April, and impact brought by the Shanghai factory will be the key focus. May the force return to the market. Thank you for viewing this video, and I'll see you again.